Status quo on the markets. Let's get in one more voice. Devesh Kumar, Managing Director, Centrum Broking, joining in. Devesh, morning. We've been talking a lot about interest rates and the direction of that. The bond yields seem to be indicating a cut is on the cards. What's your own reading, both on interest rates and the sectors associated with it?
I feel that a rate cut should be done, and I think it will be done sooner than later. It's what the economy requires at this point of time, and I think it will be helpful in fighting the slowdown that we are seeing at global scale. In India, the impact of any fiscal or monetary changes will be much more, because underlying economy, it is in a better shape.
What's the call on the markets as a whole?
Market right now, I think global crisis that is going to keep it subdued, and deleveraging by US funds and deleveraging in the US will keep hedge funds a seller for some more time. But we feel that by mid-January, this peak of deleveraging will be done. It would have played out, and after January, market should stabilize. There's a view that which we subscribe to as well, is that these next 2 quarters are going to be difficult for corporate world, and therefore market will be disappointed with these results. But we feel that this slowdown or poor performance by corporates is already factored in prices, and today we are suffering mainly because of deleveraging in the US, and that leading to a weak confidence in the market.
Right. Devesh, what's your experience been at Centrum in terms of interest from various categories, be it HNI and retail, if you can actually break it up?
We feel that at this juncture, by and large, people who are negative or who are afraid of market, that outweighs the ones who are willing to take a longer term bet, and it is across section. We have always felt that retail segment, they are always followers. So when everyone else comes back to market, then they'll come and they'll cause big change in volumes or daily traded volume. But at this juncture, I think they are scared of coming to market. HNIs, a couple of them, they have been taking some informed decisions, and they have been buying in the market. But I think across segment activity is low, and today buyers are in are in very few numbers, and sellers, they outweigh buyers, whether it is institution or any other categories.
Right. What about the institutional side, Devesh? Because we did see some bit of redemption pressure coming in from mutual funds in the month of November. Do you think that trend is likely to continue?
I think whenever there is an expectation that market has not bottomed out and it is going to fall further, redemptions are more. That is one. And second is whenever corporates, for example, if you look at liquidity tightening in domestic market, and now corporates have a lot of obligations to meet in December. So in anticipation of that, they also go for redemption. So what is happening is institutional money that gets pulled out from mutual funds, that causes pressure on market. We feel that December onwards, liquidity situation domestically will be better, and so mutual fund redemptions will decline significantly, and we may see mutual funds and domestic institutions as net buyers in the new year. But this month, I think redemption pressure on hedge funds and mutual funds both will keep the market under pressure.
What's your own take about what is your own take about earnings growth from here on, Devesh, for the next that is for FY9 and 10, and what sort of returns the market could give in this time period?
We feel that FY09 earnings growth will be in the range of 9 to 12% in that band, which is a big adjustment from at the beginning of the year everyone was, our street consensus was around 20% growth. So I think everyone has revised it. For FY 2010, we expect an earnings growth of around 20%. And the reason being, interest rates are going down. So interest rates going down will have expansionary impact on margins, and it will also boost top line of interest rate sensitive corporates. So margin expansion because of interest rate cut and because of drop in prices of materials and minerals. All this will result in margin expansion, and 2010 sales will be higher because of low interest rates and improvement in liquidity situation. On top of this, if infrastructure spending is increased.
Do you believe that markets are fairly valued then, given the projections that you have?
If you look at 20% growth in FY 2010, then I think market will start factoring it in when they get first sign of it, which will be by May, June. And therefore, if you look at longer term prospect, then markets are highly undervalued, and there's a good opportunity here. So we feel that anyone who buys today in the market, he has to buy with a 2-year view. One can't take a 2-quarter call and buy in the market.
Right, Devesh, we leave it there. Thanks so much for joining us. That's a view coming in from Centrum, and the one takeaway, of course, sentiment really bad, lack of interest in the market from investors. Well, as we say goodbye to you from Anupam, Rahul and me, we leave you with excerpts of a discussion that the head of UTV, Ronnie Screwvala, had with some of the big leaders of India Inc. And the question was that was raised was really the one that is haunting everyone. What went wrong with the state administration, and will there be a solution to avoid such incidents that Mumbai saw in the future? Here are excerpts. We say goodbye to you on that note. Goodbye.
This is the UTV network. And you are with UTVI.